My name is Michael Meyer. Welcome to my November 13th weekly market update. There's a lot of news to unpack this past week, and I want to talk about how it is affecting the real estate market in New York City. So let's first of all talk about what happened in the market this past week. The S&P 500, the NASDAQ, all had a really great performance, actually best performance since June and March. Why? Was it such a great week in the markets? Well, what happened this past week was news came out about the CPI numbers, okay? And the CPI is Consumer Price Index. It is comparing how much things cost today to what they cost a year ago. Basically, inflation. If things cost a lot more today than they did 12 months ago, that's not a great thing, right? Nobody wants to pay that much more for things than they did 12 months ago. But we get this tracked every single month. And the month before, last month, when we tracked how much more were things last month from 12 months ago, it was even greater, which means that we're heading in the right direction. Yes, things are still more expensive than they were 12 months ago, but less so when you're comparing it to the month before. So people are really positive about this because it's showing maybe inflation is getting under control. And let me talk about bigger picture here, what's going on here. So inflation is a bad thing. Federal government is coming in and they're saying we need to slow down inflation. We're going to increase the federal funds rate. That will slow down the economy. That ultimately brings down mortgage rates, which also slows down the real estate market because it's more expensive to get a mortgage. And so all these things are happening, and the Fed is raising these rates at a much faster degree than they have ever done before in such a short period of time. And so we are now seeing the effects of it, and the fact that prices, relatively speaking, have been going down a bit is making it seem like it's a little early to say for sure, but the federal government is having the desired impact. And if that in case is happening, well, then we can hope and assume that the federal government will slow down the increase of their rate hikes. And if that happens, everybody gets pretty excited because that means the brakes on the economy are going to be taken back a little bit. It means that ultimately mortgage rates will hopefully eventually come down, not to like the 0% or close to it there where it was, but lower than it is today. So this is all really a lot of positive news. Now, what does this mean for the New York City real estate market? Well, first of all, this past week, we had 185 contracts that were signed. Now, that is up 3.93% from the week before. So we always like, of course, when contracts increase, the number of contracts get signed increase in New York City. I would say, though, at the same time, though, when we look at it on a monthly basis over the last 30 days, 821 properties went into contract. That's a little less than the 900 that we like to see at this time of year, but still heading in the right direction. This is not terrible news at all. And on the supply side, 283 properties went into contract. That's an increase of close to, 3.66%. More properties came onto the market than the week before. But that is completely normal. If you look at the supply over the last few years, what we're doing is really on curve. Nothing to speak about there. The one thing I would mention that I think is super relevant is that the number of units, the supply, is gone down almost 20%. That means that sellers aren't running to list their property. They're not scared. They're not panicking. You're not having a macroeconomic effect of fear making people run and list their homes. As a matter of fact, there's been a huge 87.79 increase in number of properties that went off the market. So very interesting to see that New Yorkers are more in a standstill, let's wait and see what happens type of mode on the seller side. If I were a buyer, I would really encourage you to go out there and take purchasing very seriously because inventory is actually dropping at this moment. And when the tide turns, and when the economy starts improving, and these are now we're at the beginning signs of maybe that happening, it'll probably be a little bit of a roller coaster. We'll probably have some good months and bad months and so on and so forth. But it is quite possible that we are near a change. We'll have to see. So I definitely think with the reduction in supply, this is a good time for you to jump in before you have less options and less opportunity going forward. Now, if we look at the demand on just look at it as it compared to previous years. So the number of properties have been going down, the number of properties in contract, as they normally do at this time of year. We would have hoped it would have been a little bit higher right now than it is, But once again, in general, seasonally, we do have less properties that go into contract. Maybe now, because of all this stuff going on right now, there's a little bit less. At the end of the day, we are sitting in New York City in a position where I do think it's a great opportunity for buyers to purchase properties. And I have some great listings if you're interested in purchasing. And the seller side, I can tell you that there are definitely deals happening, 185 this past week alone. So if you want to sell your property, it's definitely possible. It's a matter of price, and it is a matter of patience and deciding what to do about price and when to exercise patience as we go through this process. If you have anybody that would be interested in these weekly updates, please let me know. If you have any questions that you'd like me to answer next week, I'm always happy to dig in. I'm always interested in talking about the intersection between what's happening in the news, what's happening in the markets as it relates to our real estate market on a weekly bet level with my feet on the ground, showing properties every single day. Thanks so much for tuning in, and I look forward to sharing some updates with you as we continue forward. Take care.